to record as well. All right. Hi, and welcome to a smart guide to business and tax incentives for European companies, a webinar organized by Mäckel. This is made possible by the following companies and partners. Blair from Navigator Consulting, who came up with the idea and the vision behind it. Then Sergio Domingues, Director of the European Office of Economic Development, who will tell a little bit more about incentives on a state level. We have Melissa Ratliff from Management InSites and Aimee Redick of Upstate South Carolina Alliance, who will tell more about incentives on a community level. And finally, Kristin Mäckel, Partner International Tax of Aprio, will tell more about tax incentives in general. Afterwards, we have Q&A on tax incentives, which is done by Edward Kluiters of Nelson Mullins, Kristin Mäckel and Kevin Loiselle of Aprio, Andrew Schutt and Teri Simmons of Arnall, Golden and Gregory. Thank you all for participating. And this all couldn't been possible without our members. In short, Mäckel supports the Belgian American business community here in the Southeast. We help Belgian companies set up here, and Belgian companies who want to American companies, sorry, who want to start investing in Belgium will be redirected to the right persons. If you're interested in becoming a member and be part of all the events we organize, you can mail us at info@backels.us, and then the mail will come to me, or visit www.backels.us. And now I'll give the word to Blair of Navigator Consulting.
Good morning and welcome. Hartelijk welkom. Bienvenue. Herzlich willkommen. The Belgian American Chamber wanted to organize an event where we could network a number of professionals in the field of business and tax incentives, because the Chamber is very involved in ensuring that companies coming from Belgium and actually all of Europe into the United States are treated well, have a professional welcome, and find the best circumstances for starting up their businesses in the United States. This webinar is designed to help companies understand the concept of business and tax incentives. And one of the things we want everyone to understand, that business and tax incentives don't necessarily have to revolve around dollars or euros. It's not always about money, but it's about ensuring that a company gets off the ground and starts up well. So it could be about workforce, it could be about logistics, it could be about a number of things. The structure of this webinar is going to be two parts. The first part is going to be based on a panel of 5 professional panelists. Bram mentioned and introduced those various panelists, talking about business and tax incentives from a high level all the way down to the local level, state level, down to the community level. And then in part 2, we're going to try to break out our participants into specific language rooms or groups. We were having technical problems earlier. Hopefully we will sort those out, but we are looking at an English, Dutch, and French group, where we will have specialists who speak those languages to be able to assist the participants with issues, questions, where they will feel more, where you will feel more comfortable being able to discuss questions that are relevant to you. One thing we as experts in this area across the board want everyone to understand is that business decisions should be made based on core business models. In other words, questions about workforce, logistics, infrastructure, talent pipeline, utilities, sites and buildings, these core location factors that will affect a business bottom line day to day, week to week, year to year, and always, and should not follow the promise of financial incentives, which are going to be temporary. However, incentives can be of a great help for a startup company in reducing startup costs and even allowing a smooth reduction of operating costs over a period of time. And these incentives and business support from communities and states always depend on the economic impact of a project in that region. The very interesting thing about the Southeast US, which many European executives and organizations don't realize, is that this is a very dynamic and growing region. If you were to break off the Southeastern US and look at its GDP, gross domestic product alone, this region would be considered the fifth most dynamic country in the world after the US, China, Japan, and Germany, with $2.7 trillion GDP. It includes the states you see on the map in front of you. So it is a region that's very, very relevant, worth looking at, and includes a number of industry clusters that would be relevant to almost any company: chemicals, aerospace, automotive, plastic injection molding, EV, batteries, tourism, agriculture, ag tech. So you name it, there's going to be a cluster somewhere in this very dynamic region. Beyond being a very dynamic economic region, the other interesting thing about the Southeastern US is that because for many years this had been an impoverished region of the US, this region has strived very, very hard to increase its economic development and continue to be ranked very high by specialist groups for being professional in its role in economic development. And as you can see from this map, which shows some of the states that Area Development Magazine has rated as the top 10 states in the US for doing business, 6 of the top 10 US states are actually located in the Belgian American Chamber of the South region. So this means that if you're looking at this region of the country, you're going to be in the hands of very talented people, very good logistics, very good incentive programs, business support programs, business friendly. It complements this idea that this is a very growing region, and we want to make sure that we as a region do not get underestimated, and as we see in many cases, European companies looking at California or New York, New Jersey, Massachusetts, or even just as far as Texas. So keep an eye on this very important region as you think about your business. And with that, we want to start our webinar. A reminder that we will start with panelists that will present on various aspects of business and tax incentives. And then we will break out, hopefully, into the specific language rooms.
Thanks, Jim. I'll now pass on the word to Sergio Domingues, Director of the Europe Office of Georgia Economic Development.
Thank you so much, Bram, and thank you so much for having me and for organizing this event. Let me just start off by saying that I look after Georgia's Europe office, which is based in Munich, Germany. This office has been in place since 1973. It was originally established in Brussels, Belgium then. Let me just mention that the Belgian business community is very important to Georgia. In fact, there are more Belgian companies in Georgia than any other state in the United States. So before we advance here, I just want to refer you to Georgia's business incentives brochure, which is always available and up to date on our website, georgia.org. Next slide, please. I represent the state of Georgia's Department of Economic Development, and the office in Munich serves as an extension and also as a reflection of our global commerce and international trade departments. We are on the ground to attract and recruit new business. We place also a great emphasis in supporting our existing industry and small businesses. And we support and try to grow our tourism and film industries in the state. Next slide, please. So as far as our services are concerned, our representatives offer a customized consultative service. Now, I say customized because every project is different. Every company has their own needs and requirements, and we are prepared and positioned to address the intricacies of any company, regardless of the size, scope, industry sector that it may encompass. And so from the initial stages of consideration, our state and most other states also work to support your company's project and really interest in locating into the United States. And so what we try to do here is highlight the advantages, define some of the incentives you may be eligible or qualify for, and some of the other programs and resources that are available to you. And again, all of our services, given that we are representatives of the state of Georgia, are free of charge and confidential. But before we get started, this is the Smart Guide on Incentives. Let's just lay a few things out just to make sure we're all on the same page. Incentives are thrown around in Europe. For some, it's, there's an expectation that a big bag of money awaits you in the United States if you decide to open, whether it's a sales office or warehousing or some sort of production facility. Incentives are not subsidies. They very much depend on the size and scope of your project. They are performance-based, so your commitment to the US, to that state, to that community will be monitored and you will be supported accordingly. They vary across states and communities. The United States is comprised of 50 states, but it also has over 3,000 counties. And that's something that I will showcase in the next slides. But incentives, if you could just go back one, please.
Sorry.
Incentives do play an instrumental role in lowering upfront costs for companies. And they don't stop when you negotiate them for the first time, when you're establishing in the US. They can be reactivated and negotiated upon a decision to expand. Next slide, please. And so here's a checklist for any company considering investing in the US, and our experts, especially those in the breakout rooms, can go into greater specificity here. Location is key, as I mentioned, at the state level and also at the local level. The size and scope of the project is crucially important. Capital investment, real and personal property, machinery and equipment, real estate. Then the number of people you will decide to employ in the United States. What kind of profiles will they have? What kind of positions will they fill? And the wage level for each of those positions will play a very important role in determining the level of support that any state or any community can offer. And then lastly, the investment period, which is sort of tied into a business plan. The business plan will be referenced again and again during this presentation, but the investment period can vary. But for us, When we send you that project profile or a project questionnaire, we're looking at 5 years. I guess the question is, where do you see your company in 5 years in the United States? And every state and community will be very curious to know what your plans are. Next slide, please. This is really just an example of a breakdown of statutory incentives and some discretionary incentives. And job tax credits, I'll just touch on briefly on my next slide, but the incentives that are offered come in the form of tax credits that will help to minimize your corporate tax burden, that can go towards minimizing a company's payroll tax liability. And then there are a number of exemptions, sales and use tax exemptions that will help to minimize that burden as well. Then come the discretionary incentives that are offered by a state, again, depending on the size, the scope, the profile of the project, that will be then offered to a company from the state once its final location has been defined. And so just to be clear, if you are considering a number of communities in any one state, the state will only put its final offer on the table once you have narrowed that search down to the final community. And then Georgia Quick Start is our workforce training and development program that is also a discretionary incentive that I will also touch on next. Next slide, please. So this map may be a little overwhelming, but let me just share that the state of Georgia has 159 counties, and these counties are divided up into, in essence, tiers of development. And so for each job that you create, there is an assigned value, and this value will be multiplied to the number of jobs that are created within a 5-year window. But really what I'd like to illustrate in this map is each county is different. There are many counties to consider, and you will receive different incentive proposals from each one of these communities, not only within Georgia, but in any other state as well. Next slide, please. And then finally, that discretionary incentive that I had mentioned previously is Georgia's Quick Start employee training program. This is a customized workforce solution for any company considering hiring folks in the US. It is a discretionary service for new and expanding companies, but it's one that you would have to qualify for. And Quick Start for many decades has done an excellent job of supporting companies in the following industries: advanced manufacturing, automotive, aviation, business operations, distribution, food, and bioscience and healthcare. And so we lean on our technical college system to support these efforts and to prepare your workforce so that they are ready and operational to meet your timeline to become operational on the ground. So I think that was my last slide, and that was just a quick introduction to Georgia and incentives. Thank you so much.
Thank you so much, Sergio. I'll now give the word to Aimee Redick, Director of Global Engagement of South Carolina Upstate Alliance.
Thank you, Bram. This is the best part of my job, is when I have a chance to meet with companies who are in growth mode and are considering how they make that leap to the United States. I'm Aimee Redick. I'm with the Upstate South Carolina Alliance. We are a regional economic development office. So we work as a team with the State Department of Commerce, as well as with our local communities. When I refer to the Upstate, we're a 10-county region. We connect Atlanta and Charlotte. And to give you some reference, we've got about a population of 1.5 million people. We have more than 540 international companies who are located just in our region. And international companies have been coming to South Carolina and the Upstate for a long time. Our workforce in the Upstate, about 10% of them are employed by international firms. So that's about twice the national average here in the US. So much of our focus in economic development is supporting small and medium enterprises who are looking to expand into the US. So when companies are looking to expand, I echo what Jim said in terms of it's based on your project, it's based on your needs, and there's many factors that play into that. And one of those that is typically top of the list for most companies, whether you're a big company or a small company, is workforce. What state or region has the talent that can fuel your growth? There are many resources that you can look at that can show what talent is available. This is just a snapshot of by industry in the Upstate, an example of what the manufacturing workforce can look like. This can show you the number of locations that are there, the total jobs, what's the concentration of jobs. And we also work with companies who specifically want to dive deeper into specific jobs and want to know how many do you have, what's the average pay. So I share this because talent is important. And no matter whether you're going to a state or a region, many of them have access to this type of data and can support you in looking at what data is available. And to build off of this, on our next slide, each state and region offers different forms of training and support. And similar to what Sergio shared on Quick Start in Georgia, most states will have a workforce training and support program. In South Carolina, it's Ready SC, and it's really built around your needs. In addition to that, in South Carolina and some of the other states in the Southeast, there's other programs that are going to provide you incentives for additional programs, like if you have a registered apprenticeship program. These types of programs, they're available to new companies who are coming in, and they're also available to expanding companies who are here. So whether you're a large company or a small company, oftentimes these are benefits that are available to you. If you're hiring 100 people, it may be available, and oftentimes for as few as 10 employees that you're hiring. There's also a group of incentives available in many states that relate to your existing workforce and job retraining credits, on the job training credits that may be available to you. So with workforce being key, do know that there are support and incentives available for your growth. And when it comes to your growth, know that economic development teams want you to be successful, and we can often connect you to market intelligence that can support your growth. So again, here are just a couple of examples, whether it's industry specific that you want to know what that looks like, how many players are in the market, what are the strengths, who can you connect with? There are resources that are available for you. Likewise, many groups, whether it's at the state level or regional, can help prepare customized company lists for you. So if you're looking for a certain group that is going to be your targets to grow your business, or whether you're looking on the supply side, know that the economic development teams are there to support that growth. And in that vein, we're also there to help you find a home. So again, whether you're big or small, we are here to support your search for a specific real estate opportunity. And sometimes that can be something that you want space within an industry collaborative group, or you just need co-working space to get started. We're happy to help you find the right spot for your growth plan. So with that, I'll close my portion by saying that look at economic development offices, whether it's the state or region or local level, as an extension of your team, and ask them for what support they can provide. Every state and region is different. Some offer different levels of success. So look for opportunities to work with groups that want to be a part of your future growth.
Thank you, Aimee. Now I'll give the word to Melissa Ratliff, VP of Marketing of Management InSites.
Thank you, Bram. Welcome, everybody. I'm just going to tell you a little bit about Management InSites first. So we're based in Charlotte, North Carolina, and our company is a full-service consulting, management, and operational firm that specializes in helping foreign companies start and run their U.S. subsidiaries. One of our unique offerings is the International Business Incubator, which is perfect for small and medium-sized companies that need operational support to enter the U.S. So like Aimee, I'm going to be focusing on local community support. And just to give you a little snapshot about Charlotte, since we've talked about Georgia and South Carolina, Charlotte's metro region has nearly 2.5 million people and has 25 colleges and universities, which makes it an ideal place in terms of human and intellectual capital. So when we're talking about where you're going to land, even if your company can't get some of the incentives that we've already discussed, there are plenty of business reasons to select one community over another due to the level of support they can offer businesses like yours. So now looking at, what do you need to do to be successful? You'll want to work with experts who can help you do in-depth market analysis and craft a business plan. So at Management InSites, our marketing experts can handle every step, or we can work with members of your team if your company has the time and internal resources. So remember, you're experts in your business, you know your product and service, but what you don't necessarily know is how to run a US company or be successful in entering the US market. So apart from the many rules and regulations that go into doing business here in the States, there are also softer cultural differences that could make market entry bumpy. So examples include Americans' expectations regarding customer service or our business culture of spending a lot on marketing. So you want to seek out advice and be open to the advice you receive. So on that end, we always also advise our clients to find industry veterans with 10 or plus years of experience who can help you open doors within your industry to meet your sales goals. Next slide. So consultants and industry experts are just a few of the team of professionals that you'll want to assemble while starting your US entity. So as Aimee said, think of everybody as an extension of your team. So settling in a community with top-notch professionals who are well-versed in the unique challenges foreign companies face will help you succeed. So this is just a brief list of some of those experts, and I'll touch real quickly on what they do in case you don't know. So immigration attorneys assist with visas for foreign employees to work in the US. Corporate attorneys draft and review legal documents, as well as protect your IP or trademarks. Certified public accountants will ensure you follow tax laws at the local, state, and federal levels. Insurance agents will advise you on policies like product and liability, directors and officers, property, and workers' compensation. Banks will have different treasury management systems or levels of customer support. So it's really important to pick a bank that meets your financial needs and understands those of foreign companies. And if you're importing any physical products, you'll need a customs bond and broker, as well as a warehouse or third-party logistics provider if you don't have your own space. If you do need your own space, site selection experts like Jim can also help you narrow your locations based on your specific requirements. And when you're talking to HR professionals, they're going to explain some typical benefit packages here in the US. You'll want them to be very realistic on labor costs and help you find employees that will fit your culture. So again, Management InSites can help you find and manage a team like this in the company, in the place where you settle. So some communities also have strong international associations. You have country-specific international chambers, such as the Belgian American Chamber of the South, which offers businesses local support and networking opportunities, plus excellent webinars like this one. Then there are overarching chambers like the European American Chamber of Commerce. Some organizations offer educational events that keep you informed of important events back home. An example here is the American Council on Germany. And others offer opportunities for you to market your company to the community at large. So for example, the World Affairs Council of Charlotte is one of the most active in the country, and they have a CEO speaker series that highlights foreign companies in the area. And then if your company is sending over employees to the US, you also want to know where your embassy, your consul general, or your honorary consuls are located. They can help you connect with other local businesses and governmental entities. They can also assist in services like passport renewals and emergency services for your citizens, or for their citizens. Next slide. So you can also learn a lot by joining your local Chamber of Commerce. The Charlotte Regional Business Alliance offers programming for talent insights, empowering women, ensuring equity in the workforce, and supporting emerging leaders, just to name a few. And Aimee touched on how local governments can offer grants or workforce development opportunities. Some work very hard to retain the businesses that establish in their regions. So that includes existing industry programs like the one highlighted here on the right for Mecklenburg County. And then innovation networks are examples of groups that support companies across topics, from workforce to tariffs to new technologies. They can be at the local or national level. And then you want to connect with industry associations to help keep you abreast of any exciting news or changes that will impact your specific products and services. So all this is to say is that you're not alone. There are plenty of resources to help you enter and grow in the US market. And while some of these can help you no matter where you locate, others are specific to your town, city, state, or region. So knowing about these local resources when deciding on where you should locate is just as important as any tax incentive or grant a community may offer you. You want to think about your long-term goals and the everyday support that you're going to need to reach them. So I know everyone is on this call is ready to welcome you to the Southeast, which is a great place for doing business in more ways than one. And if you want to know more about Charlotte, North Carolina, or Management InSites International Business Incubator, I'm happy to connect with you further. Thanks for your time.
Thank you, Melissa. I'll now give the word to Kristin Mäckel, Partner International Tax of Aprio, who will talk more about tax incentives.
Right, thank you, Bram. Well, good morning, good afternoon to everyone. I'm happy to be here and give you a little introduction, a short introduction to the tax system, I guess, here in the United States, and we'll be happy to answer more specific questions in the breakout room later on. The panelists have already talked a little bit about tax, the specifics of the state taxes and credits in their states, and so I just want to kind of keep that, at a high level for you today. As ways of introductions, Bram said, my name is Kristin Mäckel. I'm a partner of international tax at Aprio. I'm located in Atlanta, and our firm's offices are in the Southeast mainly, besides Georgia, also in North Carolina, in Tennessee, and Alabama. And as such, we work with a lot of firms, obviously, that are manufacturers and distributors and service providers and other companies in those states. And the reason why I'm talking to you is because I work exclusively with companies that are foreign owned. So, foreign companies, mostly out of Europe, that are doing business in the United States, and several of them also, out of Belgium and, a lot of other European countries. That's why I'm, here today. And so just to give you a high level introduction, as the panelists said, and I agree with them, if you select a site or if you select the location to actually locate your business, the business reasons are driving that decision mostly, but firms come to us at an early stage also to just determine, besides, what kind of entity they will want to have here, just to understand the tax system overall, so we can help them determine, what can they expect and what do tax credits and incentives actually do to the taxes they will eventually owe here. And because overall, the tax system, although everybody thinks the tax system in Europe is complex, we have a lot of levels of taxation here in the United States. And, that is the federal tax level, which is also regulated by the tax treaties that we have between the United States and other countries. But then there's also state taxes and community taxes, which is, county taxes and potentially also city taxes. And so that can be a pretty complex, taxation model for most companies. But but especially here in the Southeast, I think that the states are very very driven to assist companies and especially in their first years of location here to actually mitigate a lot of taxes through the tax credits incentives that we've already heard about. The taxes that firms can expect are income taxes, which is on the federal and state level. You're taxed on your profit here, just like you would know that from your home country. But then there's also property taxes, which which finance the counties and cities in the states. And you may have, or you will have sales taxes that you will have to pay or that you will have to charge to your customers. And in some states, also taxes on the capital that you employ. So, the investments that you make here. So overall, as I said, various levels of taxations. And we think especially at the beginning, when you consider moving to the United States, it's important to understand what kind of taxes can you expect where you're located, just to put together a reasonable business plan. Because we see that sometimes that firms come here and they realize there's either property taxes or some kind of capital taxes that that they didn't expect to have, and that of course drives that of course puts a dent in your profit in the end, and we just want firms to be aware of that. Again, the panelists already talked a fair amount about, the incentives that the states offer. And here, what we see mostly, or what is most relevant for, our client base, especially if they're manufacturers, right? That is tax credits for jobs creation and also for research and development. Especially the R&D tax is, a tax credit is available on the federal level and the state level, and it's very interesting, I think, to a lot of firms. Many firms are not aware of that, and they think, oh, we're not doing R&D in the US, we're creating our products in Europe, but R&D from a US tax perspective is a very broad, definition, and especially for manufacturers that are setting up, it also includes process optimization and just setting up your plant. It's not just that you plug in and everything works. So all of this could be considered R&D, and that's particularly interesting for firms that are new here. And our role is also to educate you about these tax credits that can help you mitigate some of the taxes, especially as a young company. So we distinguish generally, between the statutory, incentives, which are, written into the law. So if you meet the requirements of what is written in the law, everybody has the right to get these credits. You don't have to negotiate them. But there's also discretionary incentives, as mentioned previously, for example, property tax abatements or certain grants, which, you would have to negotiate with the communities in the state, and, which are specific to each company. And those are specifically relevant for, depending on the size and of your investment and the jobs that you create. Also, the tax credits could be depending on the size of your investments and the jobs that you create, but as I said, they're written in the law, and very well from the get-go, depending on how many jobs you create, you may get a jobs tax credit or an investment tax credit depending on the size of your investment. Just to summarize, as I said, the tax system has several levels, and for us, welcome to talk more in detail. It's just about educating you at the beginning of your process on what those are, so you can, create your expectations and build it into your business plan, which you undoubtedly will need to locate a business here in the United States. Happy to discuss any questions in the breakout rooms now.
Thank you, Kristin. I hope the technical difficulties are resolved. Maybe.
I don't see the possibility to put people into the different language rooms still, but Edward Kluiters, who's going to manage the Dutch language room, has offered to set up a separate Zoom or Teams meeting for those participants who want to meet with him. And I did ask Kevin if he would like to set up one for the French group. And what we can do for those Dutch-speaking participants, we can send you the link that Mr. Kluiters has set up for that separate meeting. You would have to exit this meeting and then dial in separately, as I understand. Is that right, Edward?
Yes, that's right, Jim. There's a link in the invitation. I'll send it to Bram, who can send it to everybody on the call. And you can just click on that link, and if that doesn't work, there's a dial-in number as well.
Okay, bedankt, Edward.
Graag gedaan.
And Kevin, are you able to set up a separate?
Yes, Jim, I am. I will circulate the meeting link to you now, and if you're able to share it, or maybe I can just directly share it in the chat. Is that an option? Will the participants see that?
Yeah, you can send that to, you could send it to everyone, and then those who want to join you in the French language room can simply exit and then connect with you directly through the new link. And we apologize for the technical difficulty. We only practiced 3 or 4 times and it worked, and today it doesn't. So we apologize to our French and Dutch language participants. So there's the link for the French language participants to speak and meet with Kevin Loiselle from Aprio.
And I shared the link for the Dutch participants.
Okay.
Right, thanks, Jim. I will hop off and go to the other.
Merci beaucoup.
Bienvenue.
Okay, bonne chance.
I will do the same thing, Jim. So thank you very much.
Okay, thank you.
Thank you, Edward.
Tot ziens.
Okay.
Okay, so we are now in our English language room automatically because we're all we're the remaining participants. So Andrew, we'll turn it over to you.
Hey, good afternoon, everyone, or good morning, as the case may be. So my name is Andrew Schutt. I'm a partner with the law firm Arnall, Golden and Gregory. My partner, Teri Simmons, is on the Zoom as well. Let her introduce herself. We're a full service law firm based in Atlanta, Georgia. We have an office in DC, and we work with companies all over the world, actually. My focus, I co-lead our corporate group, but I also co-lead our economic development practice. And I've been doing this for over 2 decades. And what I do is I represent both foreign and domestic companies in negotiating incentives, everything we've been talking about here. Over the past couple of years, I've either looked at my team and I've looked at or negotiated incentives all over the United States. We serve as compliance counsel for a Fortune 50 company. And as part of that, have to be aware of what trips and traps there are for the unwary and various incentives all over the country, and also what incentives are available, which is often the first task for a company coming to a locality or to a state or to a community. Teri, I'll turn it over to you to introduce yourself and we can go around the horn here, but I'm looking forward to this discussion very much.
Hello, everyone. My name is Teri Simmons. I direct our international and immigration practice group here at Arnall, Golden, Gregory, where I've practiced for over 30 years. So together with Andrew, I've seen my share of new US market entries. And Jim, I understood from our discussions earlier that we wanted to really make this session a bit about a discussion among everybody, and also answering some of the questions we've received already in advance of the webinar, and that maybe folks will put into the chat now. So I think everybody may want to pop back into the picture. I wanted to lead off with a couple of questions, actually, because I know that Georgia and North Carolina and South Carolina are very, very active in Europe in particular, and also in the United States. And the Council of American States in Europe has held any number of really awesome in-person seminars, webinars to help companies come in. And I just wanted to throw out there to Sergio or to Melissa and Aimee, whether we have any of those really good programs coming up in Europe or in the United States that you're aware of, and whether there's going to be some in-person seminars in the various states on these issues if you're sort of interested in economic development information in a more detailed fashion or venue.
I don't know of any myself. I don't see Sergio on the call yet. I don't know if he dialed into the French language one or not, but Melissa or Aimee, do you know of any in North or South Carolina?
So I will say our team is back traveling again. One of our members is at Anuga, a food trade show in Europe this week. So we are starting to make those mission trips, and we'll be working with the offices in those countries. But as of right now, I don't have a specific event that would be included within that. Though definitely they're starting to happen. We're excited about the borders being open again and to be able to meet in person and support companies one-on-one.
I would turn it back and just with another question, and then I'll turn it back to you, Jim. But, you know, Andrew, I guess Sergio jumped off of this call, but having Melissa and Aimee on the call, you know, knowing that you've represented companies in all 50 states with negotiating economic incentives. I mean, if you had a middle-sized company making a US market entry and they were interested in Georgia, South Carolina, North Carolina, I mean, what types of approach would you take as far as contacting, you know, Aimee, Melissa, Sergio, others with regard to the various communities? Would you contact the states? Would you contact the communities directly? What types of things would you be asking for? You know, practically speaking, if you have a Belgian-owned company and they're interested in doing perhaps first sales and technical support, later production in the United States, I mean, what would you be telling them to do as far as reaching out on these southeastern states?
Yeah, I think first and foremost, if they're talking to me or talking to any of the other advisors on the call here, they've already made an important first step, because I think getting your advisors lined up as early in the process as possible is really key. I have found in various states that the point of first contact, especially if it's going to be multiple potential sites in a state, multiple counties, is the state economic development agency, are often very helpful. And then, you know, one thing that I've found across all states that's really important is just, you know, making it a competitive process. That's often what drives incentives and the type of incentives you can get and how far, frankly, a community and a state can go incentivizing a company to come to town. And locate a facility. You know, there's a lot of incentives out there, but often the first thing you need to know is what's available. So having a team put together who's aware of what's available and what you need to ask for, and frankly, what you shouldn't ask for, is really important. And one other thing just to add, only because it's foremost on my mind this year, and we're seeing this in a lot more states. Folks talked about clawbacks and performance criteria. We're starting to see in some states and some communities and counties, none of the states involved in this program, by the way, what I call hidden traps for the unwary. There's a county in a Midwestern state in Illinois that attached a prevailing wage requirement to an incentive. And we had a client, thankfully, we weren't representing them at the time when they signed on for list, but we became their counsel after list fact, and now we look at these things for them. Unbeknownst to them, signed on to a prevailing wage requirement that was hidden in the statute. So really important to make sure whatever state community you're looking at, that you have the right folks on board who frankly know the state community, state and community that communities that you're looking at.
Jim, do you want me to continue with, I know we were breaking up into language rooms and I was going to moderate the English one, but I know you're on the call now too, which is awesome. So I don't know if you want to jump in with some questions or you want me to continue.
And well, I was going to just make the general comment that it's useful for a company to talk to, I would say, generalists regarding geography and looking at regions. Once you say, for example, I want to go to Nashville, and you talk to the people in Nashville, it's particularly it's very American that we as Americans, we become regional patriots, and people in Nashville, that's the only place that you will want to go, and they will talk about how wonderful Nashville is. And the same thing will happen in Austin, Texas, and the same thing will happen in Atlanta, Georgia. And so you won't get a very balanced picture as a incoming non-American of what the reality is on the ground. And so it's useful to meet with someone who has a non-vested interest in your success, in being able to say, hey, these are wonderful logistical centers across the Southeast: Charlotte, Atlanta, Nashville, Richmond, Chattanooga. But you mentioned that your product is a biotech project. Let's look a little bit closer at what kind of regions have the workforce that would be good for this kind of your kind of a company. And so there are subtle things that would make specific regions possibly more successful for a company because of the business model of that company. And again, it's just going to be, no matter what region you go to, unfortunately, what we find is communities say, yes, we have that workforce. And no, they don't all have biotech workforce, and they don't all have aerospace and automotive qualified workforce. So one has to be very careful when you go too far to the local level. You need someone that can speak generally to the benefit of a company. You have the same problem if you go to a state, because they also have a vested interest in your coming just to that state. But no, there's nothing wrong with looking around and talking to different communities and states. But as the participants will have heard from the various panelists, once you hear the different options, you're going to be very confused as to, okay, they have 6% tax, they have a 7%, they have a 4%. Is there a better location? And then you find out, well, the 7% tax is not really 7% because it's treated in a different manner than the 5%. So actually, you could actually pay less tax there for this reason. And actually, property tax is less in that state than it is in another state. So it's a very complex decision, the business location. So I know everyone's expecting me to say that what you need is a site location consultant like ourselves. That's not always the case, because it can be a relatively easy decision for certain companies. But if it's a complex decision, you really need some advice from experts. It doesn't have to be a site selection consultant. I sent through the chat room about 5 minutes ago that the most important location factors today are workforce and logistics. And I think everyone on the panel mentioned workforce. So these are very important things to look at.
Yeah, Jim, that's so true. I will often say to clients, incentives really shouldn't drive the process. They should supplement it. workforce so important, and you can have all the incentives in the world, but if, for example, you have a factory and you have no one qualified that you can hire and employ to run it, the incentives are going to be useless to you. So.
Also, I'll jump in and say, and working with a lot of companies coming in on US market entries, one of the first thing that I say is we really need a very clear, detailed 5-year business plan. And this comes not only from the standpoint of having something to present when you're meeting with Aimee and Melissa and everyone with regard to their communities, but also in connection with immigration, because with almost all visas that you'll ultimately process for the skilled workforce that you're going to bring in and that you'll have to bring in from your home country, you're going to need a 5-year business plan. So I think you need it very clearly to think through what you're looking at from community to community, whether that be Georgia, North Carolina, South Carolina, but also from an immigration standpoint, you'll need that 5-year business plan, and you'll need to evaluate up front whether you're going to be able to bring the people you need to kick off the business in the United States with the specialized expertise, whether there is an immigration option, which I know is a tremendous issue this year, but I wanted to throw out that 5-year business plan as the starting point for working with any of the communities.
Can I add something to that? I also mentioned the business plan earlier. It's also relevant if you really would like to understand what your taxes are and how your taxes actually, if you actually will owe any taxes, right? And how your incentives actually eliminate those. Oftentimes, firms believe they have, a certain tax credit or a certain incentive, but, in the end, which is great, but, sometimes you don't even owe tax, right? The taxation system in the States, especially in the Southeast, is now mostly that the tax is calculated based on the sales that you have in a particular state. And many manufacturers, manufacture in one state, but their customers are all in other states. And so you may not even owe any income taxes in a state. We see that more often than not. And so it's relevant to kind of think, through this and determine really, what locations, what it means to be in a certain location with regards to, the tax credits and incentives, and if they really help you or not.
I would say too that a business plan can also help with your perception for the people you want to hire, because if you really know what your plan is, you'll show them that you're not, a startup in the US, even if you are just starting your operations here, but you'll show them that you're a company that they can want to take a risk on to start working with. And so it can help you with your talent development and acquisition as well.
And I'd also add let's call them the non-statutory incentives, things like tax abatement, grants and whatnot. I would be very mindful, and your advisors can help you with this, on what you're signing up for. So I'll give you an example. If you're getting a $250,000 grant, but with it comes hours and hours of compliance obligations and reporting obligations, and then it's going to cost you $50,000 to negotiate the agreement, you might balance it out and say, yeah, not really worth it. And I've seen in a number of states the compliance obligations and the reporting obligations becoming more and more, let's just say more and more. So, again, I think looking at the two biggest incentives I see, the non-statutory ones, tax abatement and grants, they almost always come with a jobs and investment requirement, wage requirement, sometimes a prevailing wage requirement. I've had a few clients decide not to accept a multi-million-dollar over the life of the incentive because of the wage obligation that it imposes on them. It doesn't meet with their nationwide wage or wage goals and wage. So
one thing I'll throw out to people too, we've been talking a lot about corporate incentives, tax abatement, and all of those matters that Andrew and Kristin work on a daily basis. But But I always also encourage people not to forget the other incentives. You know, a lot of times when you're looking at an area, it's all about who has agreed to come to the United States and to relocate their family. And what a community has to offer in that regard is oftentimes very important, because if you can't drive that person over and can't support them through the process, you may have a tremendous issue. So I look to things that you can ask for, like if you have older kids, in-state tuition for college. I recently found out, interestingly enough, that really South Carolina offers this from almost every visa type, with the exception of an E1 visa. And that's tremendous, because out-of-state college tuition can be, you know, $30,000 a year. And this is something that could support the families going into a particular area. But there are things that you also have to think about for those people who are critical to relocating and to driving the business as well.
And sometimes it's also like the culture of the community, right? You don't want to send somebody who's used to being in a European city to the middle of nowhere just because that rural community offered a bunch of incentives if it doesn't support the person and make them feel like they've made a good choice for themselves and their family in terms of what their new home looks like. So keep those things in mind as well.
Jim, do you want me to continue with some of the questions that I've seen sort of pop up, not only in the chat, but in other areas that could be interesting to the group? I see you on mute.
Yes, yes.
Co-moderators.
Yes, go ahead. Go ahead, ask some of those questions.
You know, we had some questions actually up front. Some things like, should I incorporate a company in Delaware, and can officers of a U.S. entity be foreign persons? I guess that one goes to Andrew, and then maybe one to Kristin about, you know, how does the tax incentive programs work? You know, how are they calculated?
Yes. A foreign national can be an officer of a U.S. corporation. What was the other question, Teri?
Should I incorporate in Delaware if I'm going into the Southeast?
Yeah, good question. I will say in the United States, and I don't know the exact number, but most, and maybe one of the other panelists does, I would say most companies organize in Delaware in the United States. That's because Delaware has the most established law. It's a corporation-friendly state, although by no means do you have to. I mean, we have a lot of clients, for example, that are opening up a facility in Georgia and decide to form as a Georgia company. There is an additional administrative burden if, for example, you organize in Delaware and have a facility and a presence in Georgia, because you're going to have to form in Delaware and then qualify to do business in Georgia, and you know, a little more compliance obligations. So again, something to discuss with your tax and legal advisors. But yeah, more often than not, Delaware is a very favorite choice of many companies.
I saw one question in the chat that I wanted to respond to, at least on behalf of the economic development organizations, and that is, you know, can we just get a list of all of the different departments and people? Certainly, I think within each state, there are lists, though what I would encourage, or what I would say and offer, is we are here to serve your specific needs and to get you connected so that it's easy for you to connect with the people that you want to. And every company is different. So if you're opening up manufacturing, we want to provide you a direct line to the best person that can help you in regard to the regulations, the things that you have to know in setting up. We want to facilitate that connection so that it is seamless and easy for you. So certainly there are lists available, though I would say take advantage of the providers and of the economic development team to really provide that white glove service for you, to make the connections and get you to the people that you want. That's really what our job is.
In that regard, I mean, I wonder if it would be appropriate to ask Melissa, you and Aimee, you, what are bringing companies to your area lately? I mean, I've seen y'all make any number of announcements. I know the work that I do in each of your communities, but like, what would you say is a perfect fit? What kind of company, what kind of size? What are you seeing the real specialization? Why are you seeing companies come to your community? I don't know if you want to start, Aimee, because I see Melissa is still muted, but.
Yeah, I'll be happy to jump in. I think from all ends of the spectrum, a couple examples are Oshkosh that just made a big announcement in Spartanburg County, and they're going to be making the next fleet of mail delivery vehicles here. So we've been making some pretty cool BMWs in the Upstate for a long time, but now the next mail delivery system is going to be made here. And so for a company like that, their needs are going to be very different as a large manufacturing company, and we'll provide different support to them, down to a true kind of market entry company, a recent Belgian company that located here called POSIX. And they have tracking system and software. So their target audience are manufacturers and bringing technology to manufacturers. So for them, they looked at the Upstate as an ideal spot to be able to reach that target market, and to be incorporated into a community that understands manufacturing, understands technology, and already has an international base. So it really runs the whole spectrum of companies that are going to find success here. I think definitely where that manufacturing technology come together is certainly a sweet spot for us.
Yeah, in Charlotte, North Carolina, and in Charlotte and in North Carolina, you know, we have a variety of industries as well. And with Management InSites, we help companies whether they choose to be here in the region or wherever they need to be. So we have clients that are in all sorts of sectors that are not necessarily related to what the region is known for. But there's, you know, a large fintech here in Charlotte because of all the banking. We have some advanced manufacturing. The state also has a lot of biomedical. So there's a lot of different industries that are here in North Carolina. And then, you know, for the smaller companies, a lot of times it's, you know, where are your customers based? So we have, for example, a client who is in the woodworking machinery company. And so because North Carolina has a lot of woodworking companies, it makes sense for them to be here, not because they're doing any manufacturing, but they're servicing those clients. So it really just depends on, you know, where your customers are located.
Teri, you had asked me a question before on how incentives, you know, how that works, right, with the tax system. So let me answer that. Obviously, it really depends, you know, on, you know, what kind of tax incentive it is or incentive it is. But let me, you know, take one step back and explain, you know, why are we talking so much about tax incentives, right? And I think, you know, in the United States, what is a big difference between the United States and Europe is that, especially in the manufacturing area, you know, all the, I want to say, you know, the benefits and to incentivize firms and give, you know, give money to firms, you know, I just say that generally money is in the United States through the tax system. You know, I think Europe is very different, that, you know, a lot of firms get grants for R&D, and, you know, there's different other government authority, but it does not really run through the tax system. But here in the United States, whatever happens, and we started especially also last year through, you know, all the COVID aid that was given, besides the loans that we're giving out, you know, those, you know, loans and you know, from that came from the banks, you know, everything again ran through various tax systems, the payroll taxes and income taxes. That is just how the system works in the United States, and firms need to be aware of that. Just that we have, you know, from the get-go a different tax system here in the United States. And so, and that, taking that, to say, how do these tax credits and incentives work? Generally, the tax credits that I mentioned, like R&D and jobs tax credits, in most states, I want to say, actually offset income taxes, right? So that means you have to be profitable and you have to owe income taxes on the federal level and on the state level to actually, benefit from them. Now, for a lot of firms, and especially, manufacturers, the startup costs and depreciation and other costs are so high that they don't have any income at the beginning, right? At least not from a tax perspective. We're not talking about cash flow or book income, but oftentimes you can depreciate your assets so quickly that you don't owe any income taxes. So that means your credits in the first couple of years may not actually offset any income taxes, but you can carry them forward for 10, 20 years, depending on what it is. Georgia is a little different. There's tax credits and incentives that can actually benefit firms before they're profitable and offset payroll taxes, and which is helpful for these firms, especially in the startup phase. But overall, what we see is that especially manufacturers in their startup phase are mostly burdened, or they pay mostly, the only tax that they pay is property taxes, right? That's very significant tax, which can be depending on the community, between 1% 2% of the asset value. So if you're a manufacturer with a lot of assets, that is your most significant tax that you will pay. And here come in property tax abatements, right, which various state representatives have mentioned, that need to be negotiated, and very much depend on how large your investment is, and obviously we have a fair amount of clients that cannot benefit from property tax abatements. So this is something to consider, and which is a tax that is not as an income tax. It's above the line, for the CFOs amongst you. So that is oftentimes something that is very relevant and important to know.
I have a couple comments before I turn it back over to Jim. I'm really shocked that Aimee didn't throw out the greatest advantage that Greenville in particular offers to Belgian companies, i.e. the trap door. Greenville has like the best Belgian restaurant ever, and why Atlanta and Charlotte have not been able to replicate or do something to support our Belgian friends, I do not know, but
I told her that would be cheating. I told her that would be cheating.
I see. Just had to throw that one out. But one thing that we've been asked lately, particularly by a lot of folks who are looking at a U.S. market entry, and I have to bring it back to the immigration side, is getting a waiver of the travel ban. And I just wanted to update everybody on the call to the extent that folks are looking to coming into the U.S. and there are some updates. One update is that the U.S. consulate in Belgium right now expecting that the Biden administration will lift the travel ban in November. Now, we don't know when, and we don't know what the provisions are. The Deputy Secretary of Homeland Security was here in Atlanta 2 weeks ago. She made the announcement about the lifting of the travel ban in November, but we don't know if it's November 1 and we don't know if it's November 30th. And at the end of the day, until it's done, it's not done. So we just don't know, and we don't know what the vaccination provisions will be precisely. So I think at this point in time, we have to continue operating under the realization that for Belgian folks, for nationals to come to the United States, they'll require a waiver of the travel ban. Here's the update. The US consulate in Brussels has indicated that it's only processing waivers of the travel ban for critical travel. So my tip of the day is, if you're in Belgium and you don't yet have a waiver of the travel ban, when you file that application with the US consulate in Brussels, Department of State, make sure you make the point that your travel is critical, and you explain why it's critical, and you explain why it's urgent and it's timely, and why it must be in person. Because if you do not, it will be denied and you will not get a waiver of the travel ban. And at this point in time, all of the CBP, Customs Border Protection locations that have been so nice to really process waivers as a backup to the Department of State are typically requiring that the application be pending for 30 days before we can go to CBP. So right now, remember, if you're filing in Belgium, critical, that word, and explain why it's critical. So that's my sort of heads up at the day, because I know we've got to get you here in the first place for you to make a decision on these great communities. So I'll turn it back
to piggyback on that, Teri, I would say you have to also make sure you realize or you express why it's critical to the US that you be here, not just critical to your business, but why you are supporting one of the critical industries here in the US, because they don't really, I don't want to say they don't care, but you know, whether or not it's critical for you to be here, it's important that you're making the case that it's important for the US.
That's exactly right. The Biden administration made it more difficult actually to get a waiver of the travel ban and introduced the concept of showing that you're playing a vital role in support of critical infrastructure as defined by the Cybersecurity Infrastructure Security Act, CISA, or that you're giving executive direction to critical infrastructure. So those are the baseline qualification. I just saw a question come up from Mäckel saying that he was of the understanding that there would be no more travel waivers in Belgium because of the lifting of the travel ban. That is not correct. We have just gotten 9 approved this week. But again, the standard has just gone up again in Belgium. Interestingly enough, the standard has not gone up in Germany, Austria, Switzerland, or some of the other places processing. So it's really a post by post discretionary decision on processing and granting waivers and also the timing. So the key right now in Belgium is critical. Make that case.
Excellent. Thank you, Teri. I wanted to go back to something that Andrew had commented on about getting entangled in incentives that are so bureaucratic and costly that really you should have just said thanks, but no thanks at the very beginning. I'm actually working with a company that's looking at a location in North Carolina, and the offer looked quite excellent. They had like $100,000 grant for workforce development, but what wasn't explained that the workforce development grant was coming through a federal grant, and they had to actually work through a workforce pool of unemployed and certain census tract group folks, but the people they wanted to hire were engineers, production supervisors, and if you look at the level salaries they had that were starting at $60,000 up to $80,000, this was just not the pool of people you would be pulling from for entry level into this company. So I was able to explain to the general manager of the company that it looks like a great offer, but actually it's just not something that you would benefit from. So it's something that we should talk to the state about and just ask, hey, can't we turn this around and just find state funds that, because North Carolina, like Georgia and South Carolina, have excellent technical workforce development programs, but you can't take advantage of funds if you have to be tied to a program that links you into a pool of workers that really aren't going to be qualified for the kind of jobs you want to fill. So what I'm saying there is once your eyes start twinkling as you look at the gold at the end of the rainbow, you need to be very, very careful, because the offers that get put in front of you look very, very attractive, but you have to differentiate between what, as Kristin said, is a tax incentive that might not even be applicable to your situation, or actually a grant that you may have to qualify for, or something that will be just a grant that is going to be easily qualifiable for. So, and all of these things are possible. I would say that none of the communities and states are really trying to trick companies, but they're trying to, in some ways, they've developed unsophisticated incentives, and in some ways, overly sophisticated incentives. And so you have to be careful about how you structure your entry into the US and benefit from tax and business incentives.
Yeah, so true, Jim. And I completely sympathize and understand communities imposing requirements, jobs, and investment, because there's got to be that give and take, right? We're going to provide you incentives for you to bring a certain number of jobs at a certain wage for a certain investment amount. But I think your example is a great one. I think it's important to always read the fine print. And sometimes the fine print isn't in the offer letter. It may not even be in the incentive agreement. It may be in a local ordinance or code that your advisors, can help you interpret. So you go in at least with your eyes wide open. That's my view, is going with your eyes wide open, understand exactly what you're stepping into, make sure it works for you. And again, to Jim's point, I think generally speaking, communities are not looking for any sort of hidden traps. They're just trying to maintain that give and take, because often they have a local community of taxpayers that they have to answer to, and who expect to see those jobs and that investment. And the only other thing I'd add is free is often not completely free. For that reason, there's almost always something attached to it. So just making sure that you're very clear of what that is and that you can actually meet what you're being asked to do.
That's right. Yes, we negotiated a 30-acre property for one of our clients just as the Trump administration brought in new legislation, and our client found out as they signed the agreement with the community that the new legislation meant that they had to pay tax on the property because it was looked at as a gift. And before that legislation, it was not looked upon as a gift. So these things you have, and when the property is valued at $2 million, the tax on that could be a relatively large sum. So all these things have to be looked at carefully. Well, that was still a nice piece of property and benefited the company. So maybe one last question. We have about 5 more minutes, but Kristin said, grants are relatively rare, but maybe Andrew, when would a company be able to get a grant? Because it is relatively rare, maybe a small company would not necessarily get a grant because their project is not large enough. Is that fair to say?
Yeah, I think that's fair to say. I think there's a lot of factors that go into it. I would first and foremost say investment jobs. Jobs are almost always going to be the driving factor for most incentives like grants and tax abatement. And the more jobs, the more investment, and frankly, also where you're locating are real important factors. If taking our state of Georgia as an example, you're opening up a facility in Atlanta, Georgia, it might not push the needle as much as opening it up in a rural county where there's a great need for jobs and a higher unemployment rate. That might, good paying jobs and a lot of them, and a big investment will probably get the state of Georgia's attention more, and get a grant or even a larger grant, as the case may be.
I would say, though, in all fairness, and this is where it's great to be able to talk to the local level, is that if you're looking for something interesting and you're willing to be a frontiersman, a pioneer, so to speak, and you're starting out small, so a small workforce and maybe mid-level skill sets are going to be okay, you can find communities out there that will be very happy to grant you a small piece of property, maybe 5 acres, maybe an older building that they'd be able to lease you at maybe $1 a month. There are exceptional deals, and people like in communities, economic developers, or people like Melissa and Aimee would be able to know those communities when you tell them, look, we really want a deal. We can't really afford to be in Spartanburg, Greenville, Charlotte, or Atlanta, but we have a great product, and we don't mind being 2 hours from a major city. And we're only going to have 10 employees for the first 5 years, something like this. So
Yeah.
Be innovative, be thoughtful, take advantage of the contacts here. The program is being recorded. Bram is going to make sure that you have a link that you can get a copy of the program. I'm going to stop here and let Bram make any last comments unless any of the speakers want to say anything before I stop talking.
Okay, thank you, Jim. I learned a lot today. Thanks for everybody that participated, for all the panelists, for everybody that's watching. And the only thing that rests me to say is we wish you the best of luck in all your future business endeavors in America, in the Southeast, or wherever it will be. Thank you.